It's Friday, January 30th, 2026. This is the last trading day of the month, the last day of the week, and silver just crashed from $121 to $95. $26 gone in a matter of hours. Gold crashed from $5,600 to $4,950. $650 wiped off. If you're watching this and you're panicking right now, I need you to stop, take a deep breath, and watch this entire video. Because what I am about to show you does not make any sense. The numbers do not add up. The story the market is telling you is not the real story. Silver crashed 22% this week. It's one of the biggest weekly crashes in years. And yet, right now, at this very moment, you cannot buy physical silver. The Perth Mint in Australia has suspended sales. The US Mint has suspended sales. The Royal Mint in the UK is out of stock. Dealers in India are defaulting on deliveries. Costco has purchase limits. Let me say that again so it sinks in, but you cannot buy the product. In any normal market, when the price crashes, supply increases, sellers come out, and product becomes available. That is how markets work, but that is not what is happening here. Here, the price is crashing while supply is vanishing. The price is going down while the whole world is running out. Something is very wrong, and by the end of this video, you will understand exactly what it is. Welcome to the Hidden Economy. If you are new here, I expose what is really happening in markets while everyone else is distracted by the headlines. Subscribe right now because this is the kind of analysis you will not find anywhere else. And if you find value in this video, smash that like button. It helps the algorithms show this to more people who need to see it. Now, let me tell you why today's crash is not what it seems. A few days ago, I made a video. In that video, I told you that $117 was a crucial zone for silver. I explained why a crash was likely coming. I showed you a 30-year historical pattern. At that time, everyone was bullish. Now here we are. Silver crashed from 121 to 95. But here is what I did not expect. I did not expect that while silver was crashing, the physical market would completely break down. I did not expect mints around the world to suspend sales. I did not expect a complete disconnect between paper and physical. And that is what we need to talk about. Let me show you what is actually happening behind the scenes. And pay attention, because understanding this could save you from making a massive mistake. First, let me explain how the silver market works, because most people do not understand this. That misunderstanding is costing them money. There are two silver markets, not one, two, and these two markets are telling completely different stories right now. The first market is the paper market. This is where futures contracts, derivatives, and digital silver trade. This is where hedge funds, banks, and institutions trade billions of dollars worth of silver every day. But here's what you need to understand. They are not trading real silver. They are trading paper promises, contracts that say someone will deliver silver at some point in the future. Most of these contracts never result in actual delivery. They are just bets, casino chips, financial instruments with no physical metal behind them. The paper market is like a giant poker game. Billions of dollars change hands, but at the end of the day, most players never actually see or touch any silver. The second market is the physical market. This is where actual silver trades, real metal, coins you can hold, bars you can stack, the stuff that exists in the real world. Now, here's the critical point. These two markets are supposed to be connected. The paper price is supposed to reflect what physical silver is actually worth. But right now, at this very moment, they are completely disconnected. The link is broken. The paper market says silver is $95. The physical market says you cannot have any at any price. One of these is lying to you. Which one do you believe? The computer screen or the empty shelves? Let me show you the evidence. Perth Mint, Australia. One of the largest and most respected mints in the world. They have been producing gold and silver bullion for over a century. Governments trust them. Institutions trust them. Retail investors trust them. On Thursday morning, before the crash even happened, when silver was still trading near 117, they sent a notice to their wholesale distributors. I have seen this notice. Here is what it says. Due to the increasing worldwide demand for silver bullion products, we have a large backlog of orders for the 2026 Kangaroo 1-ounce silver bullion coin. As a result of this, we have decided to pause taking wholesale orders for this coin from today until February 23rd to clear the back orders. Read that again. Let every word sink in. Increasing worldwide demand, not decreasing, increasing. Large backlog of orders, not surplus inventory backlog. Pause taking orders, not a discount sale, pause, until February 23rd. That is almost a full month of no new wholesale orders. This was sent when silver was still at 117 before the crash, when everything looked fine on the surface. They are also implementing monthly allocations to ensure all regions receive stock. Monthly allocations. That is rationing language. That is what you do when you do not have enough product to meet demand. This is not a company having a bad day. This is the Australian government mint, one of the most reputable in the world, telling the global market that they cannot keep up with demand for physical silver. Australia is one of the largest silver-producing nations, and their own mint cannot get enough silver. I'll let that sink in, and then the crash happened. Now, let me show you the United States Mint. The U.S. Mint has suspended all sales of silver numismatic products. Their website shows products as temporarily unavailable. When you call their customer service line, they tell you they're updating prices. But here is what actually happened. Silver prices moved so fast that the Mint could not keep up. They were selling silver eagles at $91 when the spot price went above $90. They were losing money on every sale, so they stopped. They suspended everything. And when products came back online, the price had jumped from $91 to $169, an 86% price increase overnight. The 2026 American Silver Eagle that was supposed to release in January has been delayed to late February. Subscriptions are already sold out. This is the official government mint of the United States of America, telling you they cannot sell you silver at the old prices and do not have enough inventory at the new prices. But it gets worse. India, one of the largest silver markets in the world. And right now, dealers are not just running low on inventory, they are defaulting on deliveries. That means they are taking orders, accepting payment, and then failing to deliver the product. People are paying for silver and not receiving it. The headlines coming out of India are shocking. Not even a sliver of silver available. Amazon India sellers are defaulting on silver deliveries. People are posting screenshots of their orders being canceled after payment was already accepted. This is not a supply issue anymore. This is a breakdown of the physical delivery system. And it gets even worse. The Royal Mint, Britain, the official mint of the United Kingdom, one of the oldest mints in the world, they have been producing coins for over 1,000 years. Out of stock on silver bars, even 1 kilogram bars, the basic, most common format, gone. When major sovereign mints across multiple continents, Perth, US, Royal, are all experiencing the same issues at the same time, that is not a coincidence. That is not bad luck. That is a systemic crisis. And if you think that is bad, wait until you hear what Costco is doing. Yes, Costco, the wholesale retailer, the place where you buy toilet paper and rotisserie chicken. They sell silver bullion. They have implemented purchase limits. You cannot just buy as much as you want anymore. They are limiting transaction sizes. Costco is rationing silver. Let that sink in. A retail store known for selling things in bulk is now limiting how much silver you can buy. Why would they do that? Because demand is overwhelming supply. They have to ration what they have. But here is where it gets truly alarming. Let me show you what is happening in China. And this is the part that should genuinely scare you. I have the Shanghai Futures Exchange data from today, January 30th. Fresh data, real numbers. The SHF Silver Vaults currently hold 455 metric tons of silver. That is 14.6 million ounces. Sounds like a lot, right? It is not. And here's the part that made my jaw drop. In one single day, 26.94 metric tons were removed from the vaults. Almost 27 tons in one day, one single trading day. Let's talk about the silver market. And I need you to understand how insane this is. In a single 24-hour period, one exchange, the Shanghai Futures Exchange, saw 27 tons of silver removed from its vaults. That's about 870,000 ounces. At this rate, their vaults could be completely empty in less than 3 weeks. To give you some context, annual global silver demand is over 1 billion ounces. The Shanghai vaults now hold just 14.6 million ounces. That's barely 1% of annual demand. It's a rounding error. And guess what? Nobody in the mainstream financial media is talking about this. Nobody. Here's where it gets truly frightening. China has already restricted silver exports. They've classified it as a strategic national security asset, just like rare earth minerals, just like materials for weapons and AI. So think about what China's doing. They're stopping silver from leaving the country while simultaneously draining their own exchanges, moving physical metal from public warehouses into private storage. What does that tell you? It tells you China knows something we don't. They're hoarding physical silver while the paper market crashes. They're preparing for something big. While Americans are selling paper contracts and crashing the price, China is taking physical delivery of every ounce they can get. One side is selling paper, the other is hoarding metal. Which side do you think knows what silver is really worth? Now, let me tell you who's doing the selling, because this is the most important part of this entire video. Pay very close attention. Nearly all the silver selling this week has happened during US market hours. Not during Asian hours, not during European hours, but when New York wakes up and the COMEX opens. As soon as New York opens, silver dumps. Red candles. Aggressive selling. The price collapses. When New York closes, silver stabilizes, sometimes even rises. Then New York opens again, and the selling resumes. This has happened every single day this week. It is not random, it's coordinated. The US sells digital derivatives and paper promises. The rest of the world buys and accumulates physical metal. Stop for a second and really think about what I just said. American banks are selling something they don't have. They're creating digital silver out of thin air. Meanwhile, people in Asia and the Middle East are loading physical bars onto trucks. They're taking delivery, draining vaults, and removing real metal from the system. One side is playing a video game, the other is taking home the prize. American institutions are flooding the paper market with sell orders, driving the price down with contracts for silver they don't possess. At the same time, buyers in China, Japan, and India are scooping up real physical metal. Buyers in Dubai are doing the same. The paper price goes down, but the physical metal disappears. This isn't new. This has been the pattern for decades. The West sells paper, so the East buys physical. But right now, it's happening more aggressively than ever. The disconnect has never been this extreme. This isn't a free market, it's a rigged game. And if you don't understand the rules, you will be the victim. You'll sell your physical metal at the bottom because the paper price scared you. And someone in Shanghai or Dubai will happily take it off your hands. Don't be the victim. Be the one who understands. Let me show you the lease rates. That's what it costs to borrow physical silver. Normally, lease rates are near zero, maybe 0.5%. Right now, they've exploded. Some reports show 8%, others as high as 39%. 39% to borrow silver. That is a panic signal. It means physical silver is so scarce that holders are demanding massive premiums just to lend it out. When lease rates spike like this, it means the physical market is broken. There's not enough real metal to go around, so let's connect the dots. We're witnessing a complete breakdown of the paper-silver pricing mechanism. For decades, the price has been set by paper trading, where banks trade hundreds of millions of ounces of paper-silver daily. The physical market is tiny by comparison. This allowed the price to be suppressed. But now something's changed. Physical demand has overwhelmed the system. Mints can't keep up, vaults are being drained, lease rates are exploding. The paper market says one price, but the physical market is screaming that there's no silver available. Eventually, something has to give. I believe we're approaching that breaking point. What does this mean for you? I'm going to be direct. If you're holding physical silver, do not panic. The paper price is noise. Look at the facts. Mints are suspending sales, vaults are draining, China is hoarding. You're holding the one thing the entire world is scrambling to get. Your physical metal is worth what someone will actually pay for it in the real world. And right now, that's way more than the paper price. If you're holding paper silver, like an ETF or a futures contract, ask yourself if they could actually deliver the metal if everyone demanded it tomorrow. The answer is probably no. You don't own silver, you own a promise, and promises can break. And here's the paradox that will blow your mind. The lower the paper price crashes, the faster physical silver disappears. Lower prices create more demand, which drains supply even faster. The crash is making the shortage worse. Now, some people will call this a conspiracy theory. To them, I say, look at the evidence. The Perth Mint, the US Mint, the Royal Mint, all facing unprecedented stress at the same time. India is defaulting on deliveries. Shanghai drained 27 tons in one day. Lease rates hit 39%. That's not a conspiracy, that's data, that's reality. Look at the timing. This crash happened on the last trading day of January. Big moves often happen on Fridays, especially at the end of the month. Options expire, contracts settle. After a month of massive gains for silver, they crash it on the very last day. They're shaking out the weak hands and creating fear. This is how wealth is transferred from emotional traders to patient accumulators. Your fear is their buying opportunity. This has been building for years. Silver has been in a deficit for 5 straight years. Since 2021, demand has exceeded supply every single year. The world mines about 835 million ounces, but we consume over 1 billion. Where does the extra come from? From stockpiles, from vaults. But that bathtub is emptying. The buffer is almost gone. There's no more slack in the system. So what happens next? I believe we're entering a new phase where the paper and physical markets completely diverge. The paper price will be volatile, but physical silver will become increasingly scarce, and premiums will rise. Eventually, you simply won't be able to buy physical silver at the paper price. This is already happening in Japan and Dubai, with premiums of 40 to 60%. This disconnect is only going to get wider. This has happened before. In the late 70s, silver went from $6 to $50 in months. I'm not saying it will be identical, but the fundamental dynamic is the same. Paper manipulation can delay a price adjustment, but it cannot prevent it forever. Physical reality always wins. There are 3 types of people watching right now: the scared, who panic and sell; the confused, who are paralyzed by conflicting signals; and the third type, who understands. They see this as an opportunity, not a crisis. They're using this moment to accumulate. Which type are you? The price went down, but the physical metal disappeared. One of these things is a lie, and it's not the empty vaults. This is what manipulation looks like. You get to decide which side of the equation you want to be on. I'll keep bringing you updates as this develops. Subscribe and hit the notification bell so you don't miss what's next. Drop a comment and tell me if you think paper or physical will win this battle. I read every single one. The real story is never on the surface. I'll see you in the next one.